Hi, everybody. Welcome back to my episodes and number three. And today we're going to talk about FICO, credit score. So the topic is on credit. So what is credit score? And we're going to talk about that and how we determine your credit. Second thing we're going to talk about is how to build and repair and monitor your credit. Number three, what do you need to know about when it comes to credit, when it comes to buying your home, your house? So first, what we want to talk about, what's credit? Credit is basically a way that we monitor, well, I should say a company named FICO, FICO, that's all you hear all the time. FICO company set up this credit formula. And based on this formula, create a score. And there's credit agencies such as Experian, TransUnion, and Equifax. What they do is they rank you based on your credit score. So normally, as banker, when we talk about your credit score, 800 is the max out. You're the best already. There's very good credit. Most average time we see people is between 700 to 780. That's very good. I know on the screen you see 740 to 799, 670 to 739. But for most time for us to approve some type of loan, normal credit score, we're looking about 680. Sometimes we can go to low 660. But anything below that, normally banks not likely to approve anything. But situation is different. So again, you need to talk to your banker. You need, and depend which area you are, and that will make differences. Again, I'm in California. I am Southern California, and every state, every county could have something different. Every bank could runs a little bit different in that area as well. So you always don't ever be discouraged. So you always want to check with your banker. So one way you can look at your credit score, you actually can go to annualcreditreport.com, which you see the bottom. They give you free credit report. They don't give you what score you at, but they will give you your what's on your credit report. But if you have a credit card, a lot of credit card now or banks offer you free credit score. And if you see like TransUnion or Equifax, you see your 680, you say, hey, David, you were just telling me 680, it just, count okay on the computer. It also says good. Yes, but it's a little bit different. For example, experience for us to consider really good is you're about 700 and above. But for TransUnion and Equifax, normally it's around 680 is already very good. Another thing about credit, in the past, long time ago, credit normally just one. It's one credit report. Nowadays, Experience, TransUnion, Equifax have different type of credit scores. So that's why sometimes you went to buy a car, you go to a banker and you say, hey, I have a very good credit. And then when the bank runs your credit, we have different score. What's that reason? The reason is very simple. Nowadays, a lot of those credit agency using multiple score. For example, Experian, if you have an Experience credit app, which is very good, I like to use it myself, or I use Credit Karma as well. I have those two apps. They both can tells you a little bit how to fix your credit and how to adjust your credit and monitor your credit, even to lock your credit report. But for example, Experience, they have one score for your credit card. So when banks or company runs your credit for credit card, that kind of score comes up. The next one is called auto credit score. That's when you come to buying cars. And the third one is mostly likely who used by bank, and the most time we use to do home loan or anything or car loans for us for banks. And that's the most one. That's to us the most accurate one. That's based on everything. So it's good sometimes to have one of those apps, and they can help you to monitor. And also, those apps sometimes can trigger when someone stole your information and try to run your credit, and And like Experience app, personally, I use it. I actually they allow me to lock my credit report when I'm not trying to use it. So, or when someone try to run my credit, I get a notification right away and I see someone try to do something or not. But most time you can lock your credit score, so people tend to not able to get into your credit score to affecting you. Because every time a credit report's running is you lost 2 points. And likelihood if you do likelihood if you do the you open a new credit, you could lose 40 point or more. Or sometimes you could actually lose your sometimes you could close your credit card, you also lose 30 to 40 points. So you don't want to open a credit card and close another credit card right away because that will double hit you hard because it takes normally 6 months for a new credit to be reported. So you want to have the old credit card to rebuild your credit when you open something new on new credit. So we actually step into the part two area, how to build and repair your monitor your credit. So if you never have a credit card before and you never have a loan before, you are new. So in a way, bank can look at you just like someone who can't have a bad credit. So how can you build your credit? For example, you can go get an auto loan if you are you in town to actually buying a car. But normally banks not going to give you a full loan amount. So you have to have a lot of down payment for that new car as well. Sometimes that's same thing to the dealership. Some bank I used to work for, if you never have a credit and you are building your credit, the first car loan you can do, the maximum loan amount is 12,000. Nowadays, that means nothing. But that's back then. I don't know how much it's now. I don't really touch auto loan anymore. But that's one way you can definitely build your credit using auto loan to have a report. But you do need to have two revolving credit. When I talk about revolving credit, most likelihood is credit card. For you to have a home loan, you definitely need to have two credit card. I heard multiple people and many people were telling me they got declined on home loan because they only have one credit card. I mean, that doesn't mean all the bank will require two, but mostly large institution might require. Some guideline may require. Maybe smaller financial institution may not, which we can talk about that later in our mortgage when we're talking a little bit more to mortgage loan and count the guideline and the underwriting on that part. Okay, so those app is going to be very good for you to use. But you should look at yourself which type of app you want. Um, you can definitely using that to help to repair or build your credit. When you come to the buying a home, you definitely want to be high as possible. You want to be in the 700. But if you're not, don't be discouraged. Multiple lending program allow lower credit score. However, you just need to either go to the broker or you may have to step in to some credit union or financial or a small lender. Sometimes they were able to do those loans. But we get to the loan in the next chapter, next episode. So remember, how do you build your credit? Or how to create credit. You can get a secure credit card. A lot of banks offer those. That means you use your own money and you actually get a credit. They offer you a credit card. So let's say you open a saving account or something. They lock it up. You cannot touch the money for $500, and then issue your credit card. Another thing regarding credit card is don't ever use more than 70% of your credit. You can find many articles regarding to that too. The reason is once your revolving credit hits too high, it send your credit score down as well. So the best way is to do is keep below 70%. And sometimes when you make payment, and this is my experience with multiple customers told me before, that they open secure credit card. They always pay their payment on time. They pay it off every month. But they never get a credit card offer, or when they go see, when they go apply for loan, they still being sure they have no credit. It's very difficult situation for to tell why the credit bureau does this type of things. Some people told me they do able to build credit, but the best way I would suggest, let's say again, you have $500 credit card. You use just $200. You always want to pay minimum payment plus a little bit more. So if your minimum payment is $50, you want to pay $51. That shows you pay something to the principal, even just $1. Um, Sometime you want to do, let's say you owe $200. You make you thinking, David, I don't want to pay so much on interest. Right now the interest is high, 30% credit card, especially this type of credit card, try to build credit. They are very high interest. You say, David, I don't want to waste the money on the bank. Well, you spend 200, you can leave $10. You can make a payment of 190, have the bank charge you $10 interest. That's not going to be too much. And the next month you use again, you use up to $200 again. Then you pay it off altogether for the next bill, the next bill, right? You can always have a gap between somewhere and then eventually pay the whole thing off all at once. That will help a lot when you pay off a loan as well. Not always you pay off a loan going to be good. Sometimes you need to have a good mixture to have a loan and revolving credit. But if you have multiple loan, sometimes pay off a loan, they can already boost your credit score. So if you have credit, you need to buy the house, you are around 680 or 700, and you want to have a boost on your credit score, sometimes paying off an existing loan or pay down an existing credit card, don't close it, just pay it to zero. That could boost your credit score up 20 to 30 points. It depends what's the effect on your revolving line, total revolving line percentage, or on your loans as well. So that's all the best practice I would say probably using to build your credit, repair your credit, and control your credit by using multiple apps nowadays out there. And sometimes you may want to lock your credit report as well, just like I say, so no one touch it. Another little thing about this may be a good thing for you. If you come to buying a house and when someone run your credit report and they say, hey, your score is low, um, and you're like, I'm always make my payment on time, I do everything right, how come it's low? And you're looking at you get a copy of your credit report um from the credit bureau agency or from your credit card company, the app like I talk about. If you see anything that's not yours, you can always file dispute with the credit bureau or using the app to file dispute. They will researching and reboost your credit score back up again for a short time for them to investigate. But investigate doesn't mean you just report it here and then you don't go to the bank or whatever you see is wrong. Let's say you have a credit card doesn't belong to you and from a bank, and you just report it here, but you report on the credit bureau, but you don't talk to the bank. That likely is not going to help you anything. You have to contact the institution that's reporting the credit or reporting the newly opened credit card that happened to you. You need to talk to them to tell them that you never apply or you disagree with what they're reporting. But most chance if you do open credit card or you do forgot a payment, the chance you win the case with the bank is going to be rare, and they may move your score back down again. But you do able to report with the credit bureau for any dispute, and they can temporarily boost back up your score. Okay. Another thing is the third topic. What do you need to know when you come to uh, buying the house using a credit report? First, when bank runs your credit, we run all three bureau when we come to home buying a house. Cars, they normally only run one. I don't know which one they run. It depends on the lenders. For home, buying a home, I should say, they run all three. You may say, hey, David, I heard like home equity line doesn't. If you own a home and you're doing a home equity line, normally they only run one, just cost saving as well. But for most case for your mortgage, they will all run all three of them, and they use average credit score to determine. So when come to home buying, you gotta know, I would suggest you know what's your credit. So when you talk to a loan officer, they can have a better idea what kind of pricing you're going to get. Second, if you lock your credit report during the time you're going to home purchase, you want to unlock. Bank will run your credit report twice. You have no control over that. The first time is when you put in the application. The second time they run is on the closing day of your loan. So they're going to give you the money, they're going to run your credit report. And if they see changes on your credit report, that could be a deal killer. I'm gonna repeat that in the next episode or the next one. I forgot which one is it, but there's a good story from multiple customer. People go apply for a home loan while they buying a house. After they know the banker told them, yeah, everything's approved, and they start go out there to either get a credit card or go get a car. When come to closing, the day of funding the loan to the escrow, the deal got canceled because the bank start telling to the borrower and says, well, we run your credit again. You have a new credit card or you have a new car loan. Now that this that make your DTI no longer in line, which that means you no longer qualified because your debt to income is no longer in the percentage they need to be in, sometimes 43%. Let's use that example this time, 43%, and they can shut down your loan. And you could lose the house, or if you're doing refinance, your refinance can be canceled. And you may say, why my mortgage officer didn't tell me? That's another important part. Always work with your mortgage officer, your loan officer. But yes, I will never do those things. Before I going to buy the house, I will not run my credit at least 2 to 3 months or even sometimes 6 months ahead to open any new credit because that's going to drop my credit close to 30 to 40%. I mean, sorry, 30 to 40 point when I do that. That's a big chunk of your credit score if you open something new and take 6 months to rebuild it. Or closing any credit card. When you're closing revolving line, it's also going to hurt your credit. Okay. Again, it's also 30 to 40 point most of the time. So remember, before you going to apply for the loan is 6 months ahead, don't open any more credit card. Don't buy a new car. During the time, don't buy a new car or open a new credit card because that are going to hurt you or cost you your dream home because the credit score change and your DTI could change. Next thing, so the next thing you need to remember, just always double check your credit report. Okay, so most times the credit score you need is like I said 680 for most of the bank, but there will be some institution will be willing go lower. There's an article as well which you can see in the next page. And talks about credit score that um, Fannie Mae, Freddie Mac, or other like VA loan they allow, but your financial institution skyline may be different. So let's say VA says you can do a 600 credit score, But you go to bank and bank can say, hey, my guideline is 680 for us. So you may have to try somewhere else. So I will try to keep about 680. If it's 660, you're close to 680, I would definitely give a shot as well. Next thing I want to let you know is about joint credit. Why people want to do joint credit. Sometimes we do joint credit, you need to know this. Joint credit is not a bad thing. Sometimes you and your wife or you and your husband is buying a home together. You guys want to both be on loan, or you both need to be on the loan for the DTI. But if one person have a higher credit and one person have a lower credit, the bank are always going to pick the lower credit one. Just remember that. So your rate will increase. So when you come to your credit report, if your score is low, you could change multiple things. That means the pricing you pay, that means your interest rate, your rate on your home loan could increase significantly, or it could cost you not able to buy a house. Like got declined right away based on your credit score. If you have a collection, bankruptcy, all those things could be a deal breaker. But most time, if they pass 7 years, they doesn't count. So don't feel too bad. But sometimes bank may still looking at it. Collections better than bankruptcy, but sometimes you may still need to explain why you have the collection, what situation. You may have to write explanation letter. Your bank will let you know what to do. Most time that's the thing we worry about on the credit and your credit report. Okay, so that's all about your credit. I hope this is good for you. If you have any question, feel free. Leave me a message or on this, the remark or something. I will try to give to you or create special episode for it. But this is what I know about the credit, and there you can see what credit score is needed to buy a home, buy a house from mmsn.com. That's a good article. I also read a little bit and I like to share. But just remember, all the financial institutions may have their own guideline regarding to those credit score. You want to check, but don't be discouraged. Okay? Thank you so much. You guys have a wonderful one, wonderful day. And thank you for listening and watching to my podcast.